What up, YouTube? It's your boy AJ back with another video. Today's video, I'm going to talk about 5 tips that's helpful for investing in anything, whether it's crypto or business or stocks. I want to present this because I've been getting a lot of messages in Discord with people asking me, how do I do this? What do I look out for? What are some things I should get in the habit of doing when I'm investing? So I just want to go over a few tips that I use. So let's get into this video. First, we're going to talk about due diligence, the most important first step in any investment, commonly known as do your own research. One thing you never want to do is go into investing blindly. All right, so what that means is you didn't do any research. You heard a lot of hype about this protocol, crypto, stock, or whatever the case may be, and you decided that you were missing out, that you wanted to put some money into it, and then on the back end, you want to do research after you put money into it. Well, typically things don't work that way and doesn't always end in a good way. Sometimes you can FOMO into something. That's what crypto is all about. Watching a lot of YouTube videos, listening to people tell you about something, you depending on their research to make your business decision, which is dumb as hell because you should want to know more about the protocol. If it sounds appealing to you, do your research. Don't rely on people on the videos to actually do all the research for you, because at the end of the day, you never know what their intentions are. Are their intentions to make money and get views and likes, or are their intentions to actually genuinely help investors and find the right protocol and invest? Because I can tell you firsthand, a lot of those guys don't have money in all these protocols. It's not possible to have 1,000 videos on 1,000 different protocols and have money in all of them. I mean, it's just not humanly possible. A lot of people don't want to do that because it's too much to track. All I'm saying is do your own research, be mindful of different protocols out there, because crypto is like a big camouflage. You don't know what's what half the time. There's so much information coming from different directions, and you always want to fact check the source. That's the biggest thing about due diligence. Knowing who the sources are. You always have to vet the sources. Don't be going on Reddit and all these other forums because people going on rants and stuff, and you're going to get information, negative information, positive information, but you don't really know what to rely heavily on. You have to make sure that the information that you get is coming from someone credible, not just some forum out there with a group of people that just want to put information all together and mislead investors, or, just enthusiasts that's looking for an opportunity to just learn about business and entrepreneurship in general. There's a lot of things out there that's misleading. So you have to do your research. You have to make sure that you're getting the right information. And if you don't know where to get the right information from, and if the group has a Discord or anything, please reach out to them that way. So we're going to go to the next phase in this. Tip number 2. So tip number 2, trade based on data. I find this to be highly important because in crypto, we all know that it's a solo sport. It's okay to be bullish about your investments. We all get bullish. I'm bullish about what I'm in right now. But at the same time, we have to make money for ourselves. And you have to time the market based on what's presented in the market. Recently, we know that inflation is always, caused the reaction in the market to either go up, slightly before the report, and then drop right after the inflation report. If you're in a protocol right now, you have to pay attention to things like that, or like what's going on with Bitcoin, what's going on with Ethereum, what's going on with Binance. You have to be mindful of this stuff to base your trade on, because you want to get the most profitability from your protocol as possible. Everyone, we're in this to make a profit. It's okay to sell. You see the news come out, the price is going to probably drop because it's going to be directed towards a particular market. And if it's affecting Bitcoin, just assume that it's going to affect everything else. And create a strategy from there. It's all about you. It's all about, do you want to sell because the price is going to drop, and you can buy back in at a lower price? I mean, you could probably buy 3 times as much once the price drops. Who knows? It's just you have to be able to base your trades on data. This is a strategy I rely heavily on, because one thing I learned is that data does not lie. There's always a trend, and I kind of stay with the trend, and that's how I base my sales and buys on trends. If you're not into data right now and market and when to make trades, you should get into it right now. All I'm saying is we have to rely heavily on data. There's trends out there that we starting to see, and we're starting to see that crypto is becoming more comparable to tech stocks. When you look at both markets, you see tech stocks go up, crypto go up. As you see it diminish, crypto diminish. I just noticed a trend because Bitcoin has been mimicking what tech stocks have been doing. So when tech stocks go up, Bitcoin slightly goes up. And once they start to drop off, Bitcoin starts to drop off. So we know when Bitcoin starts to go up and down, the rest of the crypto market follows. That's why I say data is so important. Data does not lie. There's a lot out there. Let's go to tip number 3. Tip number 3. This one is pretty straightforward. Separate emotions. I get it. We're all passionate about making money. We're passionate about what we're invested in. We're passionate about the community, whatever the case may be. I get it. There's a difference between being passionate and being emotional. I'm passionate about Safuu and Safuu X and everything that they got coming forward. I don't want to get to the point where I'm so emotional that I start to second guess myself and start panic selling. I hope that makes sense, because there's a lot of people that's getting too emotional about price action like it's a bad thing. What goes up must come down. It's always going to be that way and stay up there forever. Bitcoin, perfect example. Everything is a perfect example at this point because the market is pretty much in a bear market right now. And it's been like that for a while. There's no reason to get too emotional about everything that's transpiring, because what it's doing is it's having an adverse effect on you and your decision making. And for me, I took a step back from being in a Discord because a lot of emotions have been raging recently because people being short sighted. Emotions are really based on short term fluctuations. People get so fixated on short term that they lose sight of the long term goal. That's why due diligence is so important. You do enough research, you understand the data behind it, then your emotions get separated. Most people that get very emotional when investing haven't done one or two things: their due diligence or their own research, and they haven't done any strong calculations to understand the market data. I get this because a lot of people don't understand this methodology about investing. But that's enough on this topic. Let's go to tip 3. Okay, tip 4, understanding market cap. Very important for so many reasons, because when you're investing in something, you want to know the value of the company or asset in which you're investing into. You also want to know if there's any growth potential later down the line and what's the risk associated with your investment. As we know in crypto, everything is data driven. So you have to ask yourself this question: is there a theme that's going on? Is there a current trend? Is this something that's going to be very innovative that it can just go to different parallel markets? So you have to ask yourself these really important questions. All right, so we're going to go to the 5th and final tip. The last and most important tip: have a strategy. Don't care if you're a beginning investor or a seasoned investor, you must have a strategy. And the strategy all starts from the beginning. Once you've done your due diligence, and then from there, you gathered enough data to understand the actual market trends, then you can formulate a strategy. By having a strategy, it helps you become a more successful, proactive investor instead of reactive. Because the reactive investors goes back to emotions. You have to separate your emotions from your investment, because at that point you became too short-sighted and forgot that there was a long-term opportunity. Hey, I really appreciate you guys for giving me a lot of feedback, so that's why I created this video. And I'm also happy that I'm helping a lot of you guys out with financial literacy and learning how to be investors. I also see that a lot of us are making a lot of money in Safuu. I hope a lot of people continue to get rich. And learning these 5 steps is definitely going to be important once you actually get to the level where you actually want to start your own cryptocurrency and build on the Safuu X blockchain, or open up your own VC firm, or do whatever you want to do. I'm going to cut this video short. Please like, comment, and subscribe. Holla at your boy. Out. Peace.